Hi everyone, welcome to Accounting with Morgan. This is the financial accounting series, and today we will be talking about recording journal entries. So what are journal entries? Journal entries are the first step in the accounting cycle. They're used to record financial effects of business transactions, things like purchases, payments, or sales. We use debits and credits to make sure everything stays balanced and every entry goes into the general journal. Each journal entry includes the date of transaction, the accounts being affected, the amounts to debit and credit, and a short description of what happened. So here are the basic rules. The debit is always listed first, and the credit is written underneath and indented. Debits must equal credits, no exceptions. Following this format keeps your journal organized and consistent. Now let's look at an example. On January 1st, a company pays $500 for rent. So here's how we would record that. You have January 1st, that's the date, and then you have the rent expense, that's the debit for $500, and then you have cash, which is the credit because that's what's going out. We're paying that for $500, and then you have the description. It says paid rent for January. This shows that the company's cash went down and the rent expense went up, one debit, one credit, and they're equal. So here are some common mistakes to look out for. Don't forget the date. Always indent the credit entries. Make sure debits and credits are equal, and use the correct account types. So here's a summary. Journal entries are how businesses track every financial transaction. They follow a set format and rely on accurate debits and credits. Mastering this will make the rest of the accounting cycle way easier. So that's all for this video, you guys. Make sure you're taking a look at the practice quizzes that I link under every video. And up next, we will be talking about common journal entries.